boom, bada, bing, straight down. These big drops often happen at 3 a.m. on a Saturday, as I've been saying in a couple of my recent YouTube videos, very recent YouTube videos, as the river kept pushing price closer and closer to the cliff, which is the bottom of my trading channel, which returning viewers, you know what that is. I can show you here, new viewers, so you know exactly why I was thinking, this really has a strong chance to come down. Although I was trying to make money off of a different situation. I did not benefit from this apart from my Dash spot trade. So I just got 40% more Dash from this move. I had 100 bagged or sold all at between $63 and $64, bought back at $41.20 or so. And in my journey from 100 Dash to 500 Dash during a bear market, I'm now halfway there. I'm at 249.6 or something to that effect. It was a really good play. I missed the last big drop before that on Dash, but not on futures. So I benefited in one way, but on my futures account, I took a hit because I was planning on getting a fake out to the downside and then a race up to 21K before it tanked. However, usually things start capitulating or making the next leg down like this at 3 a.m. specifically on the weekend. Here's why. The order books are thinner, and they need them to be naturally thinner because there are already so many limit buys and in form of spot trade, so not on futures with leverage, but actual buying Bitcoin around 20K, plus the futures, everybody trying to long with their small 100x orders and all that crap. So in order to eat through all those and drive price down, the whales and big players needed to wait till 3 a.m. It's a common play. It's not the first time. That's why I was able to guess that was happened. So let me show you why in the charts what the whales were thinking, so you can understand them better and have a better analysis for the future. And also, I'm going to show you in this video why I don't think that this is a bottom, and I'll show you the specific things to look out for in terms of higher low structure, very basic stuff, to see if this will rally up to 20K before making the leg down, or if this is going to keep going straight down to either 18K or 16.4, which are our exact next targets. Let's get it. All right, rock and roll. So first thing comes first, what were whales thinking? I'm going to put my river back on, or my Cosa ribbons. And essentially, so you see how this became a stable coin right here. It didn't move. I even posted on that. I said, hey, BTC's versatility, it can even act as a stable coin, right? So essentially what's happening here, first off, they're waiting for 3 a.m. when the order books are thin. So by default, that big red candle can't happen until they want it to happen at 3 a.m. It was more like 2:48 or something, but very close. I was about 15 minutes off. It's at 3 a.m. on a Saturday. It's probably when it's going to happen, right? And what's happening here, so first off, they had to wait for that time for the order books to be thin, but they were also printing shapes like this to pump up Bitcoin a little bit to get people bullish, so more people would take on longs. But this is their ability to stack on shorts, while they're waiting. Does that make sense? They were stacking on shorts this whole little time, not in a mega way, but a lot of people thinking, oh, it's going up, and oh, we're longing, and oh, we're longing, and oh, you know, and like even this structure, oh, it's going to go up. So they added more shorts and more shorts and more shorts because they could have been selling Bitcoin at a loss to drive it down, but that more than makes up for it as they're stacking on their longs the whale shorts this whole time. Does that make sense? So the whole idea is they both created small little plays to get people to keep longing because it was close to 20K. People thought they were geniuses stacking on shorts, and that allowed them to also wait till 3 a.m. on a Saturday to drive it down. Does that make sense? However, I was planning on making money off of a fake out of a capitulation event and then charge up, and then maybe a week later or late next week at next weekend at 3 a.m. I thought that's what was going to happen, but in my very recent video, I mentioned over the weekend, the third most problem, in my opinion, is that it goes to 18K this weekend. My most recent video, and you can go ahead and click that link right here popping up if you want to watch that, how I was able to identify that as the third most likely situation and what I thought the other two were. All right, now let's take off so for the grand scheme of things, Bitcoin had been in a channel for about 100 days. So I will actually go to more like the 30-minute chart, which should, didn't give me 100 days. There we go. Get 100 days with the 1 hour chart. See this? So it just broke out of there. So we're now out of this channel. See that all behind me? Let me make myself smaller. We're out of this channel. Okay, the reason why I'm confident that this is not a local bottom or a bottom at all is because of this, what I'm about to show you. Go to the daily chart, Tradingview. All right, it's not a local bottom because, so this blue line is our current wick low, is Bitcoin's current wick low. Let me make my arrow this color. Actually, hot pink might be better. Yeah, there you go. All right, so this right here, this blue line that you can you even see that? This blue line right here is the current wick low. In this structure, it meets over here, but usually structure, this is the structure from 2020 as Bitcoin raced from 10K way down there, came up to 19.8, had a couple pullbacks and busted through 20K. That's the structure we're looking at in November, December 2020. So as bottoms form in the price of anything, black market, testicles, oil, doesn't matter. It happens, you just look left and it's going to hit some structure. And when you have structure, you have three items. You have a top, you have a bottom, you have a middle, right? So it's going to hit one of those three places, very, very likely. So right here, this is not really the middle. It kind of gets this support here, but it's more likely, if it makes another drive down, it's going to go to 18K to these candle body lows or even to the wick, more like 17.5. All right, so this weekend, it's probably going to swipe this area. And if it doesn't do that, then I'm going to show you exactly what you're looking for here near the end of the video. I'm going to give you precisely how price will print shapes if it's not going to swipe down this weekend, but rather later. But if that does happen, what I'm going to show you at the end, that's not the bottom still. It's going to go down, all right? It's going to go a little lower. Maybe not too much more, but it'll go a little lower. So this needs to be swiped before you can think, okay, that could be bottom. Does that make sense? But the stock market still hasn't recovered, so it probably is not going to be bottom anyway. However, the possibility at least. So 18K even down to 17.5, that area needs to be swiped before you can say, okay, possibly a bottom. The next level after that, from my video in which I guessed 4 areas for a bottom, 18K being one, 16.4 is my really my favorite target. Honestly, 14K might be my new favorite target, but I'm going to stick with my original favorite, 16.4. I think that could happen over the weekend, but again, at the end of the video, I'm going to show you what to look out for. It could things could go up to test the bottom of that range first, and I'm going to show you exactly how price would move. Perhaps not on a time scale, but some version of it will be almost exactly how it moves. So we have these targets for these reasons: 18K, 16.4. This structure here, you have the top, you have the middle, you have the bottom. Right? The top is too close to 20K for have been a guess. Therefore, during that video, I didn't even guess the top of this structure because it's too close to 20K. I guessed the middle and down here. So this probably needs to be hit perhaps over the weekend or next week or next weekend, right? Okay, or even lower. Now, 14K is over here. There isn't much structure at this exact level, but when you look farther left, that's the almost exact wick high, so 13.9 and change, of this gigantic short squeeze that happened after the capitulation of it started capitulating in November 14th of 2018. It bottomed in I guess late 2018, but this bear area, this low area happened in early 2019, right? But it went from 3,200 up to 14K. Like, this is a pretty good target for a bottom. It's a pretty good target, but so is 12K because you have way more structure at 12K. So those are your targets that you have for where could bottom most likely be at this time, as opposed to thinking 6,200 and 3K. Well, once we passed, if you get under 10K, or if you get under 12K and close a daily candle on there, then maybe start talking about lower than 10K. But until a daily closes below 12K, it's not. I don't think it's logically reasonable from a mathematical standpoint to seriously be considering those levels, unless I'm missing something, some fancy indicator. But structure works, and I don't think it's reasonable to be hypothesizing about this at that time. So we're going to stick with these structure from the bottom. 12, then 14, then 16.4, then 18 are the most likely next 4 targets. All right. Now, what is price going to look like specifically if it wants to try up before then going back down? So this is not, so if this happens, I would not guess that that's a bottom because it hasn't hit the middle of the structure. But this is the bottom of that range. So when we zoom out, see that range I have? So this is the big range that Bitcoin spent 100 days in. See that? So it fell below it. And I think it could come up to test that at some point. I don't know, between this, maybe not this weekend, but next week. So, but this is exactly what you're going to look out for. So I drew this box here for a reason. Let's look left on why. This is the picture perfect anatomy of a big drop. It's almost too perfect. Look, when you have a big drop, you get a bunch of volatility, a wick high, then more volatility, or then a little drop down, then you form technically a local high. Okay? and then you go lower, make another lower local high, then you bottom. That's like literally that's how it works. And if you don't believe me, go back and look at every big drop. It does the same thing. Boom, wick high, boom, local high, lower low, lower high, bottom. All right. When you try to work your way out of it as the volatility continues the other direction, it almost always tops out and then goes back down at that level from the first local high to that wick. It's every single time when you have volatility, people go, that's where you, if you're able to get along there, you would want to get out of that at that point, because that's where it stops every time. Does that make sense? All right, now, if Bitcoin, so focusing on that, I'm on the 5-minute chart to see this, the 5-minute chart. If Bitcoin is to work its way up to 20K to hit the bottom of that range before then swiping down, this is exactly what you're going to see. Okay, so what you won't see is a straight run up like this, boom, 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 boom. You're not going to see that if it's going to hit 20K, because if something like that happens, it really streaks up there, guess what? It's going to be a small mini trap, and it's going to come straight back down if you can't form structure of lower or of higher lows and higher highs on the 5-minute chart. You need to build structure. So if it goes straight up like this, like I'm a weatherman, this is like a storm coming in. This is bulls trying to trap people to go long because they're going to stack on, you know, a small amount of shorts to after they trick you, and then they're going to sell on spot and they're going to make money from a decent size move down. Does that make sense? You don't want to see that. All right, because that is them pushing price up to trap people before they then push price down as they're taking on shorts. This is not what you're going to see if it's going to continue up to the bottom of the range. Does that make sense? All right, so if it goes straight up there without like at least 2 to 3 higher highs and higher lows, it's going to come straight back down and probably aggressively and make lows lower than that. So watch out for this. Just because it gets up there aggressively, that's not good. That's actually bad. What is good if price is going to go up to 20K before before going lower is you're going to have a series of higher highs and higher lows, and you're going to have a breakout. So you're going to have higher highs and higher lows, and then a breakout of the first most recent local high, which is here, which is lower than this box. So you're going to have higher highs, higher lows approaching this local high area. And at that point, if you break out of there, if Bitcoin breaks out, the chances of going up to the top or the bottom of that range up at 20K, so way up there, so that's the bottom of that range I just showed you. I think the chances are maybe 30 to 40% at that point, at that breakout right here. Assuming it forms higher highs and higher lows. So the chance starts increasing that a retest of that happens at that point. If it's not 50%, where it becomes 50% is if you make those higher highs, higher lows, break out of that first area, break out, then more higher highs and more higher lows, maybe even come up here, test it, then make higher lows, something like that. It can do that as well. And then start, you know, peeking your head up. That's when at maybe this moment right here, or even here, that you have about a 50% chance that price, so yeah, a higher low outside of this box, and then it goes back in. If it can come in the box, make a higher low, then get back in this box, it has a little over 50% chance of going back up to 20K before then racing down next week, perhaps with a red Tuesday or a red Wednesday of the stock market, of NASDAQ and S&P indices. Does that make sense? So this, something like this, with multiple higher highs and higher lows on the daily chart, you are looking at this box formed from the first local high and the wick high from the drop, specifically, okay, this box, that area and that area, specifically on the 5-minute chart, all right, and those levels are about 19,570 and 19,470, so $100 range, but you're also focusing on that local high right here. So as long as price is below this first local high, it's extremely more probable that you're just going to test down lower to my next blue line, which is down here, which is 18K. So as of now, 18K as opposed to 20K is, yeah, 18K is much more probable, way, like way more probable than 20K retest. Does that make sense? But when you get above here with higher highs and higher lows, the first one, then 18K or then 20K maybe is 30 to 40% probable, and then hitting 18K first might be only like 60 to 70% probable. As of now, it's closer to 89.9. Since I promised YouTube I'd never say 90% again, but right now it's pretty close. All right, so that's what you're looking for. If you're under here, it's highly likely, 89.9% chance that you're going to test lower before 20K, before any rally is going to happen. So at this point, maybe 30, 40%, please, you know, you might want to mark this off. This is, like, seriously, you might want to look at this on your chart of the 5-minute, because this is the picture perfect anatomy of a drop. It can't get more perfect than this. This is literally like how price moves when, yeah, this is the most common way after a big drop. So focus on this structure, focus on higher highs and higher lows on the 5-minute chart, and then focus on horizontals and the busting up of price over those horizontals with a base of higher highs and higher lows. That's specifically the anatomy that you are looking for. If you missed my video about why I think specific targets like 16.4, 12K, and 18K are exact potential bottom areas, then click this video right here. If you don't know how to set up a chart, then I have a Tradingview video that you can click here. It's 28 minutes, very condensed, very fast paced. You can pause it. I teach you even how to do templates and all that good stuff. It'll help you have a more profitable crypto journey. You just got Timified worldwide. Peace.